If you're losing money in the markets, then this video is for you. I'm going to show you this exact strategy using two free indicators, and then I'm going to test it 100 times. So on tradingview.com, we're going to go on the indicators section, and we're going to search RSI, Relative Strength Index, one of the most common used indicators, but we're going to change it up a bit. We're going to go into the settings on the RSI, and we're going to keep all the inputs the same. I've changed the RSI to red, thickness 2. I'm going to tick all of these other ones off here and just keep the RSI and the RSI middle band. The middle band we're going to change to white, make it a bit clearer, and turn it into a solid line. We'll be using the RSI as a baseline indicator. The RSI is above this white 50 level, we're only taking buys, and when it is below, we're only taking sells. The second indicator we're going to add is the stochastic RSI, and this will be our entry trigger. For this, we're also going to clear out some of the noise, change the background color to a faint grey, change the main line to red, thickness 2, and then the secondary line to a white, and make the opacity low. So if you didn't know, for the stochastic RSI to work, when the RSI is in this upper band up here, then we're taking sells because market is overbought, and when it's down below, that means the market is oversold. These are both points of reversal. So for example here, you can see it came down into the oversold area, rejected back in, and eventually it rolled up in price. But we're going to use the standard RSI also as a confirmation on whether to take these buy or sell triggers. So for a buy trade, we want the RSI to be above the static 50 white line. Has to be above for a buy or below for a sell. On the stochastic RSI, when the RSI crosses back above the white line here, or when it comes back into the range here, you could take your entry. Taking a long position on this candle close, set the stop loss to the recent swing low, and we're targeting 2 times the risk. So it's the exact opposite for a sell. We want to make sure that the RSI is below the static 50 line, which is this white line here, and then on the stochastic RSI, we want to pull back while the RSI is below the white line. We're waiting for that cross past the white line, or we're waiting for a cross back into the range here. To identify my sell on this candle close, stop loss at the recent swing high, and target 2 times the risk. Okay, so I'm now going to backtest this strategy 100 times using the backtester on Trader Edge. Before I show you the results, please hit that subscribe button, I really do appreciate it. So I've now backtested this strategy 101 times using an initial count balance of $5,000. This is the smallest account you can get with my Forex funds. And we had a win rate of 65.35%, which is pretty amazing. We had 66 wins and 35 losses with a profit factor of 3.77. With 101 trades, we would have went from $5,000 to $13,259. We had a max of 7 consecutive wins and only 3 consecutive losses. But this is a super simple strategy. It can definitely be scalped, and it definitely can be used on multiple different time frames, but definitely please do backtest this before taking it to a live chart. But thank you again for watching the video. I hope you have enjoyed. Please hit that like button and leave a comment below, and thank you for watching.